Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer at Worth Asset Management. Today is February 6, 2023, and I told you last week was going to be exciting, and it definitely was. But now I'm going to go over the three threes for this week. I'm going to go over the major asset classes, their performance on our top three. I'm also going to take a look at all of the major asset classes on a monthly basis. I'm also going to go over the short-term look for both equities and bonds and our top three market movers for this week. So let's jump on in.
Okay, let's go over the major asset classes, their performance on a week and a 1-year return basis. As I told you last week, it was an exciting week, and we did get a lot of information, and the market was kind of mixed. Bonds were basically flat for the week. We had our domestic equities up from 1.6 to almost 4%, where international gold and commodities that had been running had started to sell off, or some profit taking in those areas. On a 1-year basis, we still only have the US dollar, gold, and commodities as our positive, while everything is slightly chipping away or adding to their negative numbers over a 1-year basis. All right, let's go over the top three major asset classes on a long-term basis. And there is a change. We are having a battle right now. A lot of that is due to last week and what the Fed said. And so we've got to see if the equities start to take over and offense is completely on the field. Right now, it is stepping onto the field in the form of mid-cap equities and dividend equities in the top three major asset classes. We still have short-term bonds and T-bills still in our top three. On a monthly look, we still like global equities over US equities. Mid cap over small cap over large cap. We like energy, industrials over communication and tech. And on the bond side, we like the shorter term bonds over the intermediate long-term bonds. And we'll see how long that lasts. But with interest rates still kind of deciding on what they need to do, we'd stay a little bit short on the bond side. All right, let's talk about bonds on a short-term basis. This is the aggregate bond index, which I go over each week. But we're starting to see a nice chart formation. We're seeing higher lows and higher highs. Okay, that's for the first time. We haven't seen that in a long time. It's been over a year and a half on the bond side. So that's a positive, at least for right now. And as you can see, once we started nibbling back in November, had a nice little return here on the bond side. So far, so good on the bonds. All right, let's talk about equities on the short term. Now, if you remember from last week, we hit that 4,100 level, and I said we've got to break into that 4,100 to 42 level, and we did, and it literally went right up to the 42, which was the top of that support zone, that resistance zone. And then now we're probably going to trade in there until we break down or break out. So that's what we need to be watching to if we get the all clear, or if we just basically trade in this range here for a while until we can finally get a breakout. But we're seeing a nice formation in our chart also. Again, higher lows and higher highs. So again, doesn't give me the all clear. It just gives me some positives as some of these equities are stepping onto the field. This is another positive that we'd like to see in this market. All right, let's go over the top three market movers for the week. We have Tuesday, we have Jerome Powell will be talking, giving a speech at the Economic Club of Washington. And whenever he speaks, everybody listens. So he's kind of like E.F. Hutton there. On Friday, we'll have the University of Michigan Consumer Sentiment Index. And that's kind of a look of how the consumer's doing. And right now, the economists are projecting a reading of 65, which is up from 64.9 last month. And again, the bogey for that is 50, so it's quite a bit higher. So the consumer actually does feel, or at least from the survey, does feel a little bit better about this economy. All right, so let's talk about number three, which is more corporate earnings. We have Walt Disney, PepsiCo, Activision, PayPal, Uber, Toyota, Honda, etc. Again, here's a listing of them for this week. So if you own any of these, you can kind of keep an eye on them. And so that's it for this week. Thank you again for joining us. Our next update is Monday, February 13th. And as always, continue to subscribe, like, and follow us. And we shall see you next week. Have a great week trading.